Hey everybody, welcome into the Thinking Crypto podcast, your home for cryptocurrency news and interviews. I'm your host, Tony Edward. On your way in, please hit that subscribe button as well as the thumbs up button and leave a comment below. If you're listening on a podcast platform such as Spotify or Apple, please leave a 5-star rating and review. Folks, make sure you watch and listen to the end. We have a big update with the Clarity Act. There's some progress being made. I'll give you the details. Let's kick it off with Bitcoin's chart. Okay, folks, yesterday I talked about a bearish cross happening on the MACD on the daily chart. Well, today, all of a sudden, that MACD is looking to flip bullish. This is an incredible fake out if it does indeed flip bullish. The price of Bitcoin right now it is over $78,000, and the MACD shows that the bulls, or I should say the bears, are losing momentum here, but it's not fully confirmed, right? We needed to confirm because this in itself could be another fake out. We're seeing a bit of a fake out on both sides. So let's see what happens. This is a good sign. Yesterday, we talked about different scenarios about going lower, that potentially we go retest 58K, which is the low we made back in February, or we could go lower. I'm not saying I want that to happen. I'm not saying that's guaranteed. I'm just saying as educated investors, we have to be prepared for different scenarios because until there's an invalidation of the 4-year cycle, we cannot say it is broken because Bitcoin topped in Q4 of last year. So things are still on track on that front. Now, on the daily chart, the RSI still has room to run before it becomes overbought. So let's see what happens. The other factor I was highlighting is that we have to pay attention to the stock market, but because it is in the overbought zone, its MACD is showing the bulls are losing momentum. So if we look at the S&P 500 as well as the NASDAQ, they both have the similar charts. So if the stock market starts to show weakness and it starts rolling over, that's not going to be good for crypto because there's a correlation. Now, Bitcoin does move in a more volatile way. So it's kind of the canary in the coal mine as to what's coming overall. But again, we have to let it play out. And I'm looking at the metrics. That's all I'm doing. It's not feelings or emotions, just what is the charts showing us? And I've been on record that we have been in a relief rally, right? Even though people were, laughing at me, calling me a clown. And I'm saying right now, I'm seeing a flip in the MACD to bearish. So we could potentially see downside. But if that is reversed, which would be an incredible fake out, by the way, then, we could keep going higher, potentially breaking 80K. But again, that's not guaranteed. And I have to say that because people have their bias. They want the price to go up or they want the price to go down, depending on if they have longs or shorts in place. So they get angry, they get upset, or they get emotional if you say something that's contrary to what they believe versus saying, you know what? Yeah, I see both scenarios that you're talking about, Tony, but I think this has the higher probability of playing out, right? So they're not adults about it. You'll see it in the comments, the name calling and much more. But nevertheless, I'm going to continue to share the facts. I'm going to continue to share what I'm seeing. And obviously, you should do your own research. But I'm looking at the indicators that you can go look at on TradingView and see the same thing I'm talking about, right? So we're looking at the facts here and we're looking at probabilities because no one has a crystal ball. So let's see if this flips back bullish and the rally continues and we can see some alt move. That would be ideal. But I don't like what I'm seeing on the stock market, though. It's nearing some sort of local top here. But guys, I'm bullish long term. I believe the markets will continue to rally higher later this year. My thesis is Trump is going to bring in his new Fed chair, Kevin Warsh, to replace Jerome Powell. And I think as he heads closer to the midterms, he's going to want the stock market and the economy in a good place. I think they will expand quantitative easing, the money printing cycle. That's the only solution they have, right? They're not going to let the United States go into a depression or full-on recession because they don't want to have another 2008. They're going to prevent it as much as possible. And that's what they've been doing since 2008. That's why in COVID, you saw they printed a ton of money and much more. So the show must go on. And this is where you position yourself in assets and be patient. You got to be patient and have the macro view. But guys, the big news of the day that came out a few hours ago, Senators Tillis and also Brooks have finalized a compromise on stablecoin yield. Punchbowl News has the text bans rewards that are economically or functionally equivalent to deposit interest. Balances can be used for rewards if companies clear the equivalent test. So the TLDR here is that the banks have won on the stablecoin issue. It's one of the things we've been talking about for a long time. They've been lobbying hard. They are the incumbents. They have a lot of power. They have a lot of control and influence over members of Congress. we all know how the game of politics works here, and these banks have been around for longer than crypto, and they've been doing this for a long time. And they wanted to relitigate this whole stablecoin yield situation because they want to keep earning all the yield on their end, the interest, I mean, parking the money at the Fed, and only give you the breadcrumbs so that they can keep maintaining their big fat bonuses, right? But the average consumer loses out here. However, the good part is that this clears the path for the Clarity Act to make its way through. So let me give you some details here, a full write-up from CoinDesk. So Clarity Act text lets crypto firms offer stablecoin rewards while shielding bank yield. Text has emerged revealing the Clarity Act compromise worked out between members of the Senate Banking Committee, which would allow crypto firms to keep pursuing stablecoin reward programs. As expected, the text prohibits crypto firms from offering yield on stablecoin deposits if that yield is the functional or economic equivalent to bank offerings. The text comes after months of negotiations between the crypto and banking industries, facilitated by the White House and Senators Tom Tillis and Angela also Brooks. So again, not a great win here for the average Joe and Jane, and we'll see how platforms like Coinbase and Uphold and others handle this. You know, personally, I am holding some money on Coinbase and Uphold, earning yield, and I'm not putting all my money in that, right? I'm diversified. So I have money in the regular bank account at JP Morgan. I obviously put some money towards stablecoin yield. I use some money towards investing. And obviously the rest of my money is for the average everyday things, buying, spending, doing what I need to do, paying my bills. So the fact that banks were, trying to highlight this would cause bank runs and much more is ridiculous and asinine. Again, this is about their bonuses, right? We've talked about it ad nauseum. Now, a lot of folks weighed in on this news. So Patrick Witt, who I just interviewed with Amanda, my co-host at the Solana Policy Summit, he retweeted this news saying, "Go time." So right now, it looks like the Clarity Act will now move to the write-up or the markup phase, and we could expect that to play out in this month, of course, and then come late May, maybe the voting, or early June, the voting on the bill, and then it makes its way to President Trump's desk. So Alexander Grieve of Paradigm weighed in on this and said, "I warned everyone this fall, the old gods of finance do not take competition lying down, particularly not when they have a century of relationships in DC and branches in every district to fall back on. Make no mistake, this constrains the greenfield genius created." He's right here. And, it's what we've talked about. The banks have their tentacles deep in Congress with years of relationship and campaign donations and much more. Now, we got some updates from the folks at Coinbase because they were primarily, leading the battle here. So Faryar Shirzad, who is chief policy officer at Coinbase, said, "The final rewards text in the Clarity Act is now public. We've been clear throughout this process. Much of this debate was based on imagined risks, not real evidence, nor was it based on real understanding of how crypto actually works." Nevertheless, the crypto industry showed up to engage through months of meeting with, he mentions the White House, the Senate Banking Committee, and much more. He said, "In the end, the banks are able to get more restrictions on rewards, but we protected what matters, the ability for Americans to earn rewards based on real usage of crypto platforms and networks. We also ensure the U.S. can be at the forefront of the financial system, which in this competitive geopolitical era is paramount. That's important for innovation, consumers, and America's national security. Now that this issue is behind us, it's time to focus on the broader bill. While this debate has been underway, lots of progress has been made on other areas like token classification, DeFi, and tokenization. We're excited to review the full final text and for the bill to move forward. It's time to get clarity done." So this is coming from Coinbase. So again, guys, it looks like the Clarity Act can make its way now to the next step of markup. And, again, that's going to happen. It looks like May 11th, I believe, is the timeline. Let me see if I can pull it up here. And again, we could see this pass in June and make its way to President Trump's desk. So that'd be really, really great. This was the big roadblock. So let's see. There is the ethics piece, which I don't know how that's going to come up and if that's going to cause some problems. Elizabeth Warren and some other folks are trying to bring that up. I've often said I don't always agree with Elizabeth Warren, and she doesn't do things in good faith. So let's see what she comes up with. I do believe there needs to be an ethics piece, but she's going to overreach, right, to try to delay and stall things. So we shall see. So this is very good for the Clarity Act to move forward. Not entirely great for the ability for people to be able to earn rewards, but it looks like not all of it is removed. You're still going to be able to earn rewards at some capacity, but let's see how Coinbase and these platforms adjust to this and how they're able to offer it. So stay tuned for the details there. I'll try to get someone from Coinbase on to discuss. Okay, folks, this episode is brought to you by iTrust Capital, which allows you to invest in crypto and precious metals via an IRA so that you can get huge tax benefits. So you can invest in 80 plus crypto assets as well as precious metals like gold and silver. And you can do this 24/7. There's, again, huge tax advantages if you have a long-term view on these assets. It's low cost, there's no monthly fee. And if you have an existing 401k or IRA, you can simply roll it over to iTrust Capital's version. And with the crypto assets, it includes Bitcoin, XRP, Ethereum, Solana, all the big, crypto assets. And they continue to add support for different crypto assets and stablecoins, so you can get access to USDC issued by Circle and RLUSD issued by Ripple. And on the precious metal side, the gold and silver is not paper gold and silver, it's the physical assets. So if you ever want to redeem them, you can do that. So not many platforms offer that. And, look, the paper gold and silver is not a good thing, right? You want to make sure these firms that you're investing with, they actually have the physical assets, and iTrust Capital does. So this is a huge item here. And they've done 17 billions in transactions, and they've have over 300K plus accounts on the platform. I'm a user as well. And they have a premium custody account. So this, I believe, is the second safest way to store your crypto assets behind self-custody on a hardware wallet. So they use institutional grade crypto custody, such as Coinbase Prime, Fidelity Digital Assets, and others. So we know BlackRock uses Coinbase Prime. So you're getting that level of custody. So you can sleep at night knowing that you're getting the institutional tier of custody, and you can buy and sell crypto 24/7 within there. It's a closed loop system. So if someone hacks into your account, they can't withdraw anything, and it's low fees. So great solutions here from iTrust Capital. And guys, if you sign up with my link, you can get a $100 funding bonus. So check out iTrust Capital. Go to itrustcapital.com/go/thinkingcrypto. Link will be in the description. Now, on the topic of crypto legislation, obviously we just covered the big update for the Clarity Act. Australia draft payments vision eyes stablecoin interoperability. So Australia's future account-to-account payment systems may need to adapt if tokenized forms of money gain broader use, including stablecoins and tokenized liabilities, according to a draft vision for the country's domestic payment rails. So again, we've been following many different countries, right, who are embracing crypto and blockchain tech. They're putting the guardrails and the rules in place. They're putting legislation. No one's banning it, right? So they have to upgrade their existing systems. So it's incredible what's being built and how things are progressing. So the draft, co-developed by the Account-to-Account Payments Roundtable, which includes AUS PayNet, Australian Payments Plus, the Reserve Bank of Australia, and the Commonwealth Treasury, identifies digital assets as one of the several external forces that could affect future A2A payments. Here's a quote: "Tokenized forms of money, such as stablecoins and tokenized liabilities, are moving away from experimentation to adoption," the draft said, adding that the shift reflects a move toward programmable, ledger-based value that could enable new settlement models, continuous availability, and more automated execution. You don't say. Again, guys, for the trillionth time, right? The future capital markets, economies, and governments will all run on blockchain rails. This is bullish. Now, speaking of stablecoins, Tether today released their quarterly attestation for Q1 2026. And guys, this is just Q1. And they had over $1 billion in net profits. Incredible, man. And if you're still going around spreading FUD about Tether, you're missing what's happening here. I've often said on record, because I've interviewed a couple of the founders of Tether. Back in the day, I don't think their ship was in a good place. It was not right. But they've since then righted the ship, and things are in a much better place, and they continue to grow, make incredible profits, and they continue to innovate. They've done tokenized gold. They're also investing in many different companies. So this is one of the most profitable companies in the world. This is just incredible, guys. Amazing news here. Now, Bitmine, headed up by Tom Lee, acquires 101,000 ETH, which is insane. They continue to buy. And in fact, they highlighted, or I should say the Ethereum Foundation highlighted that they did sell this amount of ETH to the folks at Bitmine. It was done via OTC, so that's why it's not moving to market. But I mean, Tom Lee is going ham here, kind of like Michael Saylor does with Bitcoin. So these companies are buying, and I think they're anticipating higher prices are coming, even if they have to be patient and wait months, right? So I think we can all agree we're in that bottom zone of the market, regardless if the bottom's not in or not. There's the majority of the down move has been completed. And look, the bottom may be in already. I just don't know yet, Rick. I don't have a time machine. This is not Back to the Future. I could hop in to the DeLorean and go to the future and find out. I can't. So we have to just continue to monitor. But this is a very good sign that these firms, despite operating at a loss, despite the prices being down, are buying the bottom. They're buying the blood on the streets here. So this makes me very bullish that they're positioning themselves this way. Now, SBI Holdings eyes stake in crypto exchange Bitbank to build digital asset powerhouse. Now, SBI, huge in Japan, right? A financial giant there. They are invested in Ripple. They're bullish on XRP and as well as crypto. And they have submitted a letter of intent to acquire a stake in Bitbank, aiming to make the crypto exchange a consolidated subsidiary as part of its expanding digital asset business. And the planned acquisition comes as Japan moves to classify cryptocurrencies as financial products under the Financial Instruments and Exchange Act, a change that could take effect as early as fiscal 2027. The Bitbank deal follows SBI's absorption of Bitpoint, its planned majority stake in Singapore-based CoinHako, and a new Visa partnership offering credit cards that convert to rewards into cryptocurrencies. So SBI doing a lot here, guys. And again, crypto is a global asset class. You're seeing major institutions like SBI around the globe taking a stake, building, tokenizing, doing much more. This is very bullish. Again, I know some of you are going to say, Tony, look at the price. Well, how can you be bullish? Because I'm looking long-term and macro. I've said, I think once the Clarity Act passes, that kicks off a super cycle because it will give complete guidance on what institutions can and cannot do and the rails they need to operate or the guardrails they need to operate within. And it will allow for more capital to come in. And you have all the bridges and on-ramps now, right? You have ETFs, you have the institutional crypto platforms, institutional crypto trading and custody, all the things for big money to come in. That did not exist in the previous bull market, guys. Even though this bull market was stunted a bit, and I think that due to macro factors, not having the Clarity Act and these things in place. But I think the next bull market is going to be incredible. We're going to see incredible run-ups and future bull markets as well because the shackles will be off and the big money can absolutely come in. So I'm excited, and we all have to survive these lows, this bear market, right? And then once we come out, guys, it's going to be good times. But right now, we got to be patient and have that macro view. Folks, that's the news. Let me know what you think. Leave your thoughts and comments below. Hit the thumbs up button. Subscribe if you haven't as yet. Be sure to support the podcast by subscribing to my free email newsletter on Substack. Link will be in the description. Check out my book on Amazon. It's available in paperback and digital. Be sure to grab a copy. And if you want to expand your knowledge about crypto, because knowledge is power, I have a course at mycryptocourse.com that teaches you everything you need to know about crypto and blockchain technology. It features expert commentary. No other crypto course offers that. You will hear from people who are building, investing, and much more. And right now we have a bear market sale where you can get 50% off the price of the course if you use the code BEAR, BEAR at checkout. So be sure to check out mycryptocourse.com, guys. Links will be in the description. Folks, thank you so much for tuning in. I appreciate you all, and I'll talk to you all later.